So we're going to be talking to Emmalyn Shaw. So she's got, she'll correct me if I'm wrong, but I think it's over 20 years of technology investing experience. She's got a wide and varied career, and I'm sure she'll have some very interesting insight to impart, because she's working at a company that, in my mind, is quite unique. So we'll hear a little bit more about that from her directly. Emmalyn, thank you so much for being here. How are you?
Great. Thank you so much for having me.
Hi. So, I guess we'll just jump right on into it. How would you describe what you do and where you work, and how did you come to find your current role?
Great. Well, let me give you some context a little bit for me. I grew up in Huntington Beach in Southern California. My parents were first generation, came for graduate school, immigrants. And I joke that my mom would have been a nun if she didn't marry my father. So giving back and service was core to my upbringing. And my father, on the other hand, actually his family comes from development banks. And so really used to seeing how financial services in particular have benefited kind of small to medium businesses and the power that can have in international markets. So that really kind of prompted me to both lean towards service as well as financial services. In terms of technology, I've been in and around tech since I was an undergrad at Berkeley. I was a product manager. I worked full time to put myself through school or pay for expenses and whatnot. I was a merit scholar at Cal, and I worked in tech at Apple, and then I was a product manager full time. So really, actually as a financial services product manager, portfolio analytics company called Barra, and so really immersed myself in tech early and fell in love with that. And I think that's what led me to then pursue finance and investment banking at Morgan Stanley in the 90s. So I had an interesting front row seat to the emergence of the .com, and then unfortunately a front row seat to the .bomb as well. And started my investing actually in January 1st of 2000. So had good fortune to be in and around some larger funds, some smaller funds, doing early stage investing and growth stage investing, investing in software, internet, technology, new media, and really appreciating the different models that emerged as a result through a couple of downturns. Fortunate to work with some great companies, realized some wonderful successes, and along the way was feeling something missing, and in particular around the impact side. And it wasn't as if venture wasn't impactful, it just wasn't a focus of venture, right? It was about returns and commercial opportunities, some of which were impactful and some of which it just wasn't a focal point. And I really wanted to find a platform that actually truly prioritized those as important tenets for their investing strategy. And that's where I was introduced to a Midyar network. Pierre Midyar, founder of eBay, was really coined impact investing. And he birthed this idea of using both equity and grant dollars to affect global change, international change. And financial services is one of the many tenets that they were looking at. And in particular, the model was really built around commercial investments that were financial service focused, but that advanced financial health and economic resilience. And that really resonated with me in terms of the work they did, the focus, the ability to really create change, but using very interesting technology to do so. So I was joined about 2 years ago to run what is now Flourish. We spun that out of a Midyar network last March, and in doing so spun out 18 folks, 40 portfolio companies, of which we've added a number since then, and another 5 ecosystem investments, and run a $500 million global fund. And it's really been around that ability to affect change using investments, focus on financial health and economic resilience. That's been incredibly powerful. And I feel like it brought me full circle from where I started to the current platform today.
Wow, that's certainly a pedigree of hard work, definitely pushing towards impact as a focal point. That's a really interesting background to have, actually. And you mentioned that the aims of Flourish Ventures are to advance financial health and economic resilience. Do you think you could give to some of the people who might be less familiar, I guess, commercially, or who might not be 100% sure what those terms might mean, like maybe some use cases or some, companies that you invest in, for instance, that you think are really interesting and think, people would really learn a lot from?
Absolutely. So I think you can think about it in 2 ways. If you think about the actual individual consumer, financial health in one way can be measured just through the ability to save, right? To have buffer, to be able to live within their means and have savings for other um, discretionary expenses and the like. And I think being able to have that resilience long term, being able to have those choices is critical. Uh, and so if you think about that equation for a simple, one way to think about it is savings equals your income minus your fixed expenses, which is often the core. So education, housing, healthcare, all of which have gone up astronomically across countries for the last 15, 20 years. And then minus other discretionary expenses and fees. And if you think about that, it's very difficult to understand, well, how do you boost financial health? How do you boost savings and that comfort? And that's really around either increasing income and or helping them reduce some of the fixed expense costs, or accessing debt in a more safe, predictable way that isn't predatory. And those are some of the direct-to-consumer ways of thinking about financial health. So against that, what kinds of investments can be created? Well, one that we did globally, a thesis that we started off, was around the challenger bank. And the challenger bank is better known as mobile banking. And the idea being that, you know, deposit taking services, financial services in general, should be accessible to everyone, and ideally accessible at no fees. And there's no reason why that can't be done today. And part of what we saw was kind of the unbundling and rebundling of financial institutions, and the idea that, can we provide some rich financial services for the consumer, not having to own all that infrastructure. So you don't have to own, your physical location, your retail branch. You can actually rent a banking license, and you can actually partner with a processor and be able to provide those rich services. So what does that end up doing? That ends up actually affording for rich deposit taking services for consumers. They then can start saving. You can start seeing their cash flow. You can start thinking about giving them overdraft fee protection. So no longer the overdraft model that exists today, that's quite frankly taking quite a bit of advantage of consumers globally. You can start thinking about wage advance opportunities as well once you have this longer term perspective for the consumer. And it really builds this, and then you give them budgeting tools and the ability to think about, how do you manage expenses thoughtfully? How do you think about what expenses to trade off on? In the US, for example, we focus on the 70% of US Americans who live paycheck to paycheck, for whom $500 does not exist for an emergency loan. So that's very much a middle class problem. And so you think about along those dimensions, what other types of products can you provide? Well, how about debt management, right? So many globally, individuals have debt of some type, whether that's educational debt, whether that's credit debt, whether that's mortgage. How do you manage those? How do you manage those payments, particularly if you are living paycheck to paycheck? What kinds of technology solutions and interventions can you do to allow them to actually take a portion of their income and save in order to pay for those thoughtfully? And how do you prioritize what to spend when? And those are the types of products specifically for the consumer that you can really help with, right? There's also infrastructure. There's also business to business type of opportunities that really allow to unlock, if you will, all of the other financial services that can be provided. And I think that's another area that we've spent quite a bit of time on, is whether that's middleware, whether that's enabling banking as a service, whether that provides embedded finance specifically for all the platforms today that we engage with. Is there a way in which we can actually transact in some of these platforms and historically we haven't been able to do? And middleware allows you to do some of that technology. Another part of infrastructure is around security. So if we're out on different platforms and our financial data is out available on those platforms, how can we ensure that they're secure? And how do we actually take control, hopefully, of that data to make sure that financial data is being used correctly? So again, those are kind of areas in which we provide agency for the consumer around really important parts of their financial information. And that's another area in which we spend some time. So I think there's a lot of dimensions in which financial health can be engaged. It's not as simple as a one-point solution. I think it's quite deep and quite multifaceted. On the global scale, we look at small to medium businesses or individual shop owners, and how do you think about providing them lending and access to capital, right? Or farmers. So really critical parts of an ecosystem globally that might require that type of capital. And we think very thoughtfully about what kind of platforms can enable lending as well along that dimension.
Yeah. It definitely sounds like there are a lot of dimensions to it, but that must make it so exciting to, be at the helm of something like Flourish, where you really have the opportunity to go in as many directions as you find inspiring, right? And as you mentioned just now, you were talking about on the global scale, and you mentioned consumers and data privacy, which is definitely a big issue. And that kind of brings me to a question I wanted to ask. Like you said, Flourish is a $500 million global fund, right? So you're also going abroad. And I'm wondering, with, attitudes towards, like consumer attitudes being so different from space to space, like you brought up challenger banks. Here in the UK, a lot of people, most people I know have at least one of Monzo, Revolut, etc. And then, that obviously changes from America, where people, a lot of people aren't even, you know, exposed to contactless as an everyday technology. And so there's so much, range in the variety of what consumers expect from their services. And then obviously there's China, which is just, a million light years ahead of us with that. So I have to ask, when it comes to global investing, how hard do you guys have to think about the consumers and the culture, I guess, that people are facing when it comes to your investments?
No, it's such a great question. And just to clarify you, so our half of our capital is deployed in the US and the other half is in India, Africa, Latin America, and other parts of Southeast Asia. And I agree with you. There's a cultural dimension for sure in terms of how individuals interact with financial services and their financial institutions. And there's also a regulatory distinction, as you rightfully pointed out. And in terms of regulation, there's technology innovation that may exist. So open banking in the UK, for example, it's wonderful. It's unfortunately, we're light years away from that in some of the other markets that we cover. And so as a result, you see very different kind of emergence in technology. And in particular, also different business models that might emerge, right? So in the US, it's for challenger banks, it's an interchange model, right? That's very different than you would see in the UK. And you would also see that in LATAM. But in other markets, it might be more like a subscription or might be more lending based and as an entry point and as a different way to monetize. So I think both business models are servicing differently, but the global know-how I think is pretty important, and the understanding across markets is very important, and the need. I think that's one of the exciting parts for us when we did challenger banks is to see that pervasive need globally. Right? Whether that was in Latin America, whether that was here in the US with Chime's 8 million consumers, whether you see this in Mexico, whether you see it in India, whether we've seen it in Pakistan, the consumers have all very clearly leaned in and wanted a technology that provided this kind of rich end-to-end solution. And being able to have that learning from market to market to figure out how to roll out, well, what features matter, right? How important is that budgeting app? I think there are some markets in which lending becomes a more natural place to start. And then other markets like the US in which the deposit and the checking account was the right place to start. But all of it required trust. I think at the end of the day, as you can only imagine, financial services has been such a difficult nut to crack because trust is so critical. And I think since the last downturn, there was a bit of trust to be rebuilt by financial institutions. And I think fintech has a unique opportunity to really take that trust, to build that deep relationship, to prove their value to consumers in a meaningful way. And I think challenger banks have done a great job in trying to do that with their consumer by meeting them where their needs are and providing really rich services and visibility and transparency, pricing transparency into their products. And that's been pretty critical across the board, across countries. And it's that learning that I think we bring, that global perspective, that's been very powerful, not just to our challenger bank investments, of which I think we have 7 now globally, but across all our portfolio.
Mm-hmm. Yeah, it's an interesting question, to be sure. I mean, I know, like, it's definitely interesting at UCL because we're so global. We have 40,000 students, and every which way you turn, you're hearing a different language. Someone's using a different app. I mean, I saw in the quad someone speaking Chinese to someone else selling bubble tea using a QR code, and I was like, why can't I do that? So yeah, there's definitely some cool things going on over the world. And this one I have to ask. That's a bit. I mean, I guess this one's apt for me to be asking to you because this is a little bit of an exception for I guess the industries that you work in and that our society works in is for two women who are not white already. That's already quite a big distinction, I guess, from quote unquote the crowd. And I'm sure a lot of people have walked into rooms and not felt represented when they're, talking about industries of this kind, I guess. And would you say that like you're seeing a change, I suppose, or do you think that there are ways for funds like Flourish to encourage a change? I guess what's your experience in terms of diversity, I suppose?
Well, I feel really fortunate. And part of the many things I loved about Omidyar and then ultimately Flourish is that commitment. And I think, you always want to start from within. I think it's easy to look externally to take action, but I think we need to be reflective within. And so I think early on that was important. And as you can see, we have majority female on our team. We are rather diverse by virtue of the markets we cover as well. And we're very committed to that. Now, there's still a lot of work to be done, and I fundamentally believe that's going to continue to be an area of focus. I also think we, just in light of what's been happening globally, but particularly in the US, are really taking some time to think even more critically about what does that mean and our own reflection, our own actions. And that's something that we're actually doing real time. As you can imagine, it's such an important topic. In terms of how we think we can continue to affect change, I think it's twofold. Our commitment in particular to the LMI community globally is so critical. It's unfortunate, but the reality is the racial diversity is quite pronounced in financial services. And those, particularly in the LMI, are disproportionately represented there. And so our commitment to really wanting to help provide support and tools and services is really targeted at really trying to raise that awareness and raise that financial stability so that they can actually operate competitively in I think this market. Beyond that, I think we're also really thinking through what our role could be as investors, whether that be on the boards and when we think about bringing in independence, as well as kind of our own investments, and how do we think about making sure we really try to cultivate the right types of portfolio CEOs and management teams. And it's something we've been focused on, but there's always more work to be done. And again, I think this has been a really interesting and really important and emotional call to action for all of us to step up in a much more meaningful way, in a much more deliberate way. So I'm excited to lead the charge on that. But I very much echo what your sentiment. I think it can be quite lonely. I think it's incumbent upon us to be successful and committed to that change, to create that role modeling that will then afford for more people like us that share, people of color, people, diversity in terms of gender, and other dimensions, to really be given a seat at the table. And I think it starts with us and our commitment and being very successful in showcasing what we can bring and what our values are.
I certainly hope so. I certainly hope both as UCL Fintech and at Flourish, we can definitely make some sort of headway into working towards that, ideal world, right? And you mentioned actually something that I think ties in quite nicely with something you previously mentioned, which is, the current situation right now. There's a lot of thoughts going on about race, and you mentioned earlier that there's, that you guys are working on also investing towards services that try to help consumers stay away from so-called, predatory loans. And I was recently watching a documentary about 2008, and it's just totally heartbreaking how certain communities were targeted, but that it wasn't even just them, that there's just whole swaths of the population were just totally displaced in a shocking way. And I think a lot of people lost faith, I suppose, in the financial institutions out of the aftermath of what happened. And in America, obviously we're seeing some recovery now, but tens of millions of people lost their jobs out of the coronavirus. Do you think that there's going to be another huge loss of faith coming, or do you think that there are steps we can take, or steps I suppose you can take at Flourish and at companies to try to encourage people to have faith in a product that works, or in a product that's transparent and good?
No, I think that's a great question. I think this has been an interesting time for financial services. I think to some extent, just by virtue of actually having to be remote, and the shelter in place has really lent itself to more of the mobile, the digital solutions, and the contactless payments and the like. And so in that regard, it's really opened up an opportunity for financial services companies to engage the right way. And I think in particular with some of our investments, again, because we target those who I think who definitively have been most disproportionately impacted, those services have been only in greater demand. So as you can imagine, when you've lost your job, we have one platform called Steady that is targeted the gig economy workers, the 1099 workers here in the US. And they've always fundamentally believed that a portfolio of work is what people need to either augment their pre-existing jobs, right, to increase income, going back to that savings equation we had earlier, and or to create a portfolio of work to afford for flexibility in times where you have childcare and the other pieces of their own personal equation. And in this case, they needed that visibility across the nation as to, well, what are the hourly jobs that they can do, and who is paying the most for those services, and who are taking care of their employees in a way that provides the flexibility that these Americans may need. And that demand just went up tenfold. And then knowing that, they then provided telemedicine and offers services like that in order to make sure that they could then continue to take care of their health needs as well. Those are really powerful opportunities, and I think they develop a really important level of trust. Another company of ours, Propel, is targeted on the food stamp recipients. And as you can imagine, here in the US, the demand for their services doubled in terms of they provide pure visibility into the level of food stamp that they have on any given time of the month, and provide discounts and services along that dimension to allow them to kind of really extend their ability to food and whatnot for as long as possible. So really meaningful functionality and in doing so, they were able to partner with a company called Give Directly, where they gave $1,000 cash injections, particularly trying to target families, single mom families globally who needed it the most. So really trying to, again, engage meaningfully with the consumer where they were, and the unique platform they provided to be able to identify that they truly were in need and they really were food stamp recipients, allowed them to be able, as donations, to ensure that they went to the right person with credibility. And I think those are the types of services you'll see. Chime, as I've mentioned earlier, they were able to provide, based on their own relationship with their consumers, access to $300, $400 no fees associated in advance of a stimulus pay. So they knew that they would be likely to receive stimulus. They knew it was going to take 2 to 3 weeks because the system, quite frankly, is still quite archaic here in the US, and there's a lot more to upgrade over time that we hope to be part of as well. But in the meantime, that's the role that Chime played to provide, again, that trust and visibility. So I do think there are a lot of technology companies, and those are just a couple of our portfolio, but many others at large, that have really tried to engage more deeply with consumers and take advantage of that relationship and to be really a partner for them as they navigate a very difficult time in the market.
Mm-hmm. Yeah, and I suppose I have to ask as well, now that we're on the topic of your portfolio companies, and you said, that's a portfolio that's growing ever since you spun off, you're just, looking to invest in better, I suppose, and more impactful organizations. What, if there's a company that you're interested in, I guess, what are the metrics? Where do you look towards to see, what impact is this having? Is there a way to measure such a thing as impact? And for instance, if people are considering going into impact investing themselves, or on the flip side, if someone's an entrepreneur and they're wanting to set up an impactful company, what would they look towards to ensure that they're, meeting their goals?
Yeah, I think it really starts with kind of the mission orientation, and it's really important to understand what is the product they're trying to solve, what pain point are they trying to provide for their consumer, or if it's a business to business, what infrastructure are they trying to unlock through their innovation. It's also really important to make sure that the business model is aligned. So at the end of the day, if a company is making money based on certain attributes that ultimately benefit revenue growth, but at the expense of a consumer, for example, no matter how interesting or impactful it may seem at the beginning, and often you can find those, that divergence alone is what's going to preclude us from making a deal. We need to be able to see that there's a win-win, both for the business to thrive long-term, as well as the consumer to benefit long-term. And if those misalignment exists, then it doesn't make sense. And I think that tends to be the more nuanced decision points when you're looking at mission-based deals than maybe one would imagine up front.
I suppose the coherence might somehow, I guess, escape at certain levels where it might not be so clear. Okay, and I guess to
And then just
simplify.
to
Okay.
answer your question in terms of the impact piece, look, I think as direct to consumer businesses, there's a lot of things to look for and to see scale. So are you reaching the consumers? Are they changing their behavior? Are you seeing a high degree of saving, an increased savings rate? Are you seeing fees come down for them? Are they behaving differently, more thoughtfully about their financial health? And are they using the budgeting tools? Is the usage case going up? Are they making different decisions in terms of trade-offs, et cetera? So those are some of the more kind of micro areas that we look at. And then the macro, it's a regulated business. We look for systems change. We would love to see not just the technology companies themselves make change, but how does that technology impact the broader ecosystem? How has policy shifted? How does regulation shift? How do incumbents in financial systems respond? So, an interesting one with challenger banks has been, with the advent of challenger banks, I think that's really provided some impetus for incumbents to think differently about how do they serve their consumers, what kind of functionality they can provide, how broad do they go downstream, and what consumers are they willing to serve now that maybe they weren't historically as a result. What other types of technology innovation do they want to create? And that's just as impactful, quite frankly, as the companies themselves being successful. So there's a secondary element as well that we very much track longer term. And that is a long-term game. As you can imagine, it doesn't happen overnight, but it's something we're very committed to watching.
Yeah, no, and it definitely seems to be working. There's a graph that's been circulating, I think, a little bit around LinkedIn that's got like the amount of clicks it takes to open a bank account. And then there's like 20 for Revolut and like 100 something for, one of the traditional British banks. And it kind of just, the picture looks as you would imagine it would. And I think banks are definitely starting to pay attention. And I suppose seeing as a lot of the people watching this, whether it's now or moving forwards, are going to be students, and they're going to be a lot of international students considering a range of career options at the moment, but a lot of them may be considering finance, technology, some of these kind of professional fields. Do you have any, I suppose, advice on what they should be thinking about when it comes to choosing a career? Some people may be thinking, I really want to do something exciting and innovative, but in this economy, can I do that? Will I be able to, find something to do? Should I just stick with something classic? I guess, what would you tell students and young people, or, even budding professionals, to think about when it comes to their career arc, as you've done such an exciting one yourself, I guess?
Well, it's funny you asked me that question because I have 6 children, of which 4 of them are kind of young adults. So going through, and we've had this conversation many times. So it's apropos. And I would say you want to start with, first, what's your passion, right? What is it that you're truly passionate about? And making sure that if it's technology, if it's finance, those are not, those are great. Or if it's financial services writ large, that's wonderful. Then try to find the platform that you're going to get the most experience, the deepest, the first level of training. I always feel like that first step you make is really about building the training, the foundational training. But it's just the start, right? Part of the beauty of what the journey that you're embarking on is to be able to really grow. And if you like technology at all, you want to be growing. You need to be moving because technology is shifting every week. And so really trying to stay abreast of what roles you're playing, whether that's in sales, whether that's in marketing, whether that's in finance, and making sure that you are committed to the skills, the requisite skills that you're building in that one cohort. And then the willingness, honestly, to then switch and to continue to push yourself in thinking through. I guess the analogy I would give is even in as I mentioned with my venture career, I could have stayed in early stage. I started an early stage venture, and I probably, that would have been great. I knew that for me to be a thoughtful venture capitalist, I wanted to understand the stages of venture, and the stages of venture start with early. They start with seed, and then they go to mid, they go to growth, and then they go to exits. And I wanted to see what it meant to put money to work at those different stages, and the roles that we play as investors, and the hard decisions you make, and the different types of management teams and how they shift, and how technology shifts, and what strategic decisions they make along the way. And I wouldn't have got that if I hadn't been willing to take the leap of faith and switch funds to be able to really understand those skills. And I think for me, I knew I loved venture, but then I knew I needed to still explore within and really experiment and build out my understanding. And I think that analogy applies in whatever field you're really passionate about. The other comment I would make is, and I say this now to kids, and for me, it took me longer. I'm glad discovered my route. I don't know that I could have done it. I don't know if I had the confidence, quite frankly, to do it up front, but I'm really glad. And I can see this generation has very much leaned into mission. And I think that if you figure out something mission based, whatever that is, they hire the greatest talent. The CEOs are most truly committed. I feel like they're the most competitive platforms out there. Some of the mission based companies, whether they are on the investing side like mine, or they're on the operating side. And I think that goes a long way towards feeling really good about both your passion, your values, and your learning. And it's then those trade-offs that you make every day are not going to feel like trade-offs, are going to feel like growth. And that's a really important piece of the decision as well, and what I highly recommend.
I think your children are very lucky to be able to have this kind of wisdom on tap. That's for sure. And I really encourage everyone watching to check out Flourish and have a look. It's an interesting organization, and I think a lot of people might not know that that's an option of a long-term career as well. So if that's something that you're interested in, definitely give Flourish a look. It's a cool organization. All right. Well, that's us out of time. So I'm going to say a huge thank you to Emmalyn. Thank you so much for being here. And maybe if we're lucky, there'll be another opportunity for us to collaborate again with UCL Fintech and yourself.
I would love that. And thank you so much for having me. Really appreciate it.